Hi, good morning. It's Ross Mkts from Australian Investment Research Services. Thanks for joining us. It's Thursday morning Sydney at 9:15 on June 17th. The themes continue in global financial markets, with the French and Spanish both announcing further reforms for their economies. And this will continue to be the story as we go forward, with Europe trying to reinvent itself and also restructure itself so that it can have sustainable growth. The French raised the pension age from 60 to 62, which has been a favourite of all advanced economies over the last 18 months. And the Spanish have put through some labour reforms aimed at increasing the flexibility. And this has been one of the things the last 30 years in Europe has been the lack of flexibility in the labour market, which has caused them to have fairly high unemployment. On this point, UK unemployment last night actually was better than expected. Number of people claiming unemployment benefits fell 30,000 against forecasts of 20, and the unemployment rate stayed pretty static around 7.9%. The key next week for the UK will be the emergency budget of June 22nd, next Tuesday night. This is likely to be pretty strong. The new coalition government promising to deliver some very strong cuts to the budget deficit to really set themselves up for a medium-term growth. And this is the underlying story of all this, is that we're probably going to see short-term growth problems, but over the next 18 months to 2 years, what's happening right now is going to be positive for Europe, and especially for countries like Germany and France, where the euro is probably lower than it would be if they had individual currencies, and so it's going to help them with exports. In terms of the US markets, the data continued mixed. The housing sector in the States continues to struggle off 50-year lows. US housing starts fell 10% for the second month in a row, falling fairly heavily. The story there in the US housing sector is that they had a government grant system not dissimilar to Australia, where new home buyers got $8,000 to buy their first home. This stopped on April 30th, and from there, most of the US data, as we've seen globally when government fiscal programs stop, has come off. The big story, though, obviously, is that housing is a major multiplier for Western economies, and we may see more government expansion in this area if the US housing sector can't really fire up again. Against this, US industrial production numbers, which have been very positive for the last 3 months, are up 1.2%, helped by hot weather across the states. But generally the numbers were pretty good across a broad range of industries, including IT, cars, and consumer sector. This has pushed annual growth rate of US industrial production up to 7.6%, which is well above trend, and confirms the inventory rebound that we've been seeing over the last 6 months is really helping production and the employment side of the equation in the US. On this, the market, Wall Street was fairly quiet. It dipped a little bit down to 1110, and then made a new high of 1118 from its new monthly highs, 1118, but closed at 1114. So we're still consolidating after the big sell-off on May 21st that led to the test of 1040 on the S&P 500 on May 25th. So month-long consolidation, market at the top of its range now, at the top of that range, and we've got still got these key technical levels at the moment. 1120, as we've mentioned, on the S&P 500, 4650 on the ASX 200, 8660 on the Australian dollar, and on the euro 123.50. So today, again, no real major news. The focus will be on the Spanish government debt auctions this afternoon, with 3 and 10-year Spanish bonds being auctioned off, and clearly the focus will be on the bid to offer ratio, which will tell us how interested investors have been, and also the yield is probably going to drift higher, as we've seen with the Portuguese bond issues early in the week and over last month. Yields are going up for the lesser European credits, up around 1% to just over 5 to 5.5% area. So overall, market's still consolidating. Volatility's fallen quite a bit this week. It's down around 23% on the VIX from its highs in May of 45%. We still favour it to go higher, but we're going to need news to keep supporting this bounce that we've had. And market, as we mentioned, is at key technical levels. So thank you, and we'll speak tomorrow. Bye-bye.